Welcome back to Explain the Charts, and today we're going to be doing a technical analysis of Google stock with the help of current news and events. Today, October 4th, 2024, the market sentiment surrounding Google is mixed. Google has been making headlines with its involvement in various projects, such as its visual search app, Lens, which is being upgraded to answer questions about videos in real time. Google's transition of 45,000 PwC employees to its Google for Work business software platform, Google's partnership with the Adani Group to procure energy from a new solar-wind hybrid project, and Google's Waymo adding electric vehicles from Hyundai Motor to its robotaxi fleet. However, there are also concerns about potential antitrust lawsuits against Google, with a federal judge ruling that Google violated antitrust laws by dominating the internet search advertising market, potentially leading to a company breakup. These recent developments have created uncertainty in the market, and we'll be looking at the charts to see how these events are reflected in Google's price action. Looking at the daily chart, we see that Google has been in an upward trend for the past several months. The stock has been trading above its 200-day moving average, a key indicator of long-term bullish sentiment. The recent news about antitrust lawsuits may be causing the stock to pull back as investors are taking a wait-and-see approach. However, Google's strong market position and investment in AI are cited as positive factors for the company's future, and analysts believe that Alphabet's strong market position and investment in AI will drive future growth. Let's zoom in on the past few weeks and see how the stock is performing on the hourly chart. The hourly chart shows that Google has been consolidating in a range between 160 and 165, which could indicate that the stock is preparing for a breakout. The recent price action has been characterized by a series of higher lows and higher highs, suggesting that the bulls are in control, and we can see that the stock has tested the upper bound of this range several times in recent days, but has yet to break out. We're going to shift to the 15-minute chart now to get a closer look at the recent price action. The 15-minute chart shows that Google has been trading in a narrow range for the past couple of hours. This consolidation is not uncommon in the lead-up to a major price move, and the volume is also starting to pick up, which suggests that a breakout is likely in the near future. If the stock breaks above the resistance level at 165, it could signal a strong bullish move. However, if the stock fails to break out and falls below the support level at 160, it could indicate a short-term bearish trend. And this could be particularly worrisome if the market is reacting negatively to the news about potential antitrust lawsuits. It's important to remember that technical analysis should always be combined with fundamental analysis. In this case, the fundamental news about Google's involvement in various projects is positive, but the potential antitrust lawsuits are a cause for concern, so that makes for a somewhat bearish situation. Therefore, we need to keep a close eye on the charts to see how these fundamental factors are reflected in Google's price action. Now, let's take a closer look at the daily chart and see if there's any correlation between the news events and the chart data. If we look back at the past few weeks on the daily chart, we see that the price action has been somewhat volatile, and we can clearly see a period of consolidation over the past month. This consolidation could be attributed to the uncertainty surrounding the antitrust lawsuits. However, the stock is still trading above its 200-day moving average, which suggests that the long-term bullish sentiment is still intact. And the fact that the stock is above its 200-day moving average shows that there are still a lot of investors who believe in the long-term growth of Google, and the stock has yet to fall below its 50-day moving average. This suggests that the recent pullback is likely just a short-term correction. Let's switch back to the hourly chart and narrow in on the past 24 hours to see how the stock is behaving in the short term. And we're going to shift the time range on this chart to see if we can find any further support and resistance levels within this consolidation zone. And it looks like we've got some very important levels here, particularly between 164 and 165. The stock has bounced off the support level at 164 several times in the past 24 hours, so that looks like a very important level for us to keep an eye on. However, the stock has also struggled to break above the resistance level at 165. This suggests that the stock may be stuck in this range for a while longer. We need to watch this range very carefully. If the stock breaks above 165, it could be a strong signal that the bulls are back in control. However, if the stock breaks below 164, it could be a sign that the bears are gaining momentum, and it could indicate a significant correction. It's important to remember that these are just technical predictions. The actual price action will depend on a variety of factors, including the news and events that unfold in the coming days. We'll continue to monitor the charts and keep you updated on any significant developments. To recap, Google is currently in a short-term consolidation zone, and we've identified a few key price levels to keep an eye on. The support level at 160 is likely to hold, as the stock has bounced off of it several times in recent days. The resistance level at 165 is a major hurdle that the bulls need to overcome, and the stock has struggled to break above it. If the stock breaks above 165, it could signal a strong bullish move. However, if the stock breaks below 164, it could indicate a short-term bearish trend. The stock is still trading above its 200-day moving average, which suggests that the long-term bullish sentiment is still intact. However, the potential antitrust lawsuits could create volatility in the coming days. It's important to monitor the charts carefully and adjust your trading strategy accordingly, and don't forget that technical analysis is just one piece of the puzzle. Always combine it with fundamental analysis and your own risk tolerance. Thank you for watching Explain the Charts.